Canada's economy just hit a wall, and I mean hard. 66,000 jobs vanished in 1 month. Unemployment spiked to 7.1%, the highest it's been in nearly a decade outside of COVID. That's like the entire population of Medicine Hat suddenly finding themselves out of work. But here's what the headlines won't tell you. This economic shock is about to trigger a chain reaction that could affect every Canadian's wallet. Whether you rent, own, or are trying to buy a home, interest rates, housing prices, your job security, it's all connected. By the end of this video, you'll understand exactly what's happening to Canada's economy, why these job disasters might actually be good news for some people, and the 3 crucial dates in September that could change everything. Plus, I'll break down what this means for your financial situation, no matter where you live. But first, let me show you just how shocking these numbers really are. Picture this: 66,000 Canadians went to bed with a job in July and woke up unemployed in August. And this isn't a one-time thing. Canada has now lost over 100,000 jobs in just 2 months. To put that in perspective, that's more jobs lost than during some of the worst months of the 2008 financial crisis. The job losses were not random. 3 sectors got absolutely crushed. Professional services, think engineers, consultants, tech workers, they lost 26,000 jobs. These are 6-figure earners who drive the housing market in all Canadian cities. Transportation and shipping, they shed 23,000 jobs. That's truck drivers, warehouse workers, delivery people. And manufacturing cut 19,000 jobs. More factory closings, more production moving elsewhere. But here is the weird part. Construction actually added 17,000 jobs. Houses are still being built even though fewer people can afford to buy them. This is likely a regional trend in some areas of the country where the housing market is doing relatively well. And let's talk about wages. Surprisingly, they are still growing at 3.6% per year. So the people who have jobs are actually doing okay. If you live in Ontario, you felt this the hardest. 26,000 jobs gone. That's nearly 40% of all the job losses in the entire country. BC lost 16,000 jobs. Alberta shed 14,000. But if you're in Saskatchewan, here's some good news. Your unemployment rate actually dropped to 4.7%. That's one of the best in the country right now. And here's where this gets really interesting for your mortgage. Within minutes of this job report coming out, something dramatic happened in the bond market. Traders started betting heavily that the Bank of Canada will cut interest rates on September 17th, which is just 12 days away. The odds went from maybe to probably in a matter of hours. Government bond yields plummeted, and when bond yields fall, fixed mortgage rates follow. But here's the key. The Bank of Canada's policy rate, currently at 2.75%, directly controls the prime rate that banks charge, which is currently sitting at 4.95% right now at most banks. A quarter-point drop would drop the prime rate to 4.7%, and if you have a variable rate mortgage, that flows directly to your payment. Let's now give you an overview of what this looks like. If you have a variable rate mortgage, a Bank of Canada rate cut, likely 25 basis points or 0.25%, has a small impact on your overall budget. But when you stretch this out over the year or the term, if you're on a 5-year mortgage, this means thousands of dollars back in your pocket. If you're shopping for a fixed rate, this is where things can get a little tricky. Fixed rates don't move with the Bank of Canada. They follow bond yields. And those yields did drop, and we might see banks and lenders lower their fixed rate offerings to match that drop. If you're renewing or buying soon, this is a golden opportunity. Most lenders will let you hold a rate for 90 to 120 days, but still take advantage of lower rates if they appear. Here's what I would do. Get a rate hold now at today's rates, but make sure that you can reprice downward if rates improve. It's like insurance, but in reverse. Now for some important dates. Mark these on your calendar. September 17th, August inflation numbers come out. If inflation is cooling along with these job losses, it makes a rate cut almost certain. And September 17th, the Bank of Canada has their announcement. This is the moment. If they cut every variable rate mortgage holder in Canada gets immediate relief. And one day after that, September 18th, the Bank of Canada governor explains their thinking. This tells us if more cuts are coming this year. But here's what most people don't realize. Even if the Bank of Canada doesn't cut on September 17th, these terrible job numbers mean cuts are likely coming later this year. The question isn't if, it's likely when. To recap, Canada's economy is stalling. 2 consecutive months of job losses, unemployment at 7.1%, and sectors like professional services and manufacturing getting hammered. This isn't a blip, it is a trend. The Bank of Canada spent 2 years jacking up interest rates to fight inflation. They wanted to slow down the economy, and they succeeded. Plus, Trump down south is also having something to do with this. Consumer spending is down, business investment is weak, and now the job market is cracking. But here's the trap that the Bank of Canada is in. Cut rates too aggressively, and housing prices could explode again, making inflation worse. If they don't cut enough and unemployment keeps climbing, potentially triggering a recession. The regional breakdown tells the real story. Ontario lost 26,000 jobs. That's 40% of the national total from just one province. BC and Alberta are both shedding jobs despite different economic foundations. Meanwhile, Saskatchewan sits at a 4.7% unemployment rate, while the national rate hits 7.1%. This divergence matters because monetary policy affects the whole country, but these job losses are concentrated in Canada's largest, most expensive housing markets. I hope you enjoyed this episode and found it informative. If you did, please hit the like and subscribe button to catch more important Canadian real estate information. If you liked this video, you're gonna love this one as well.